Hey, it's Mason from Mason's Forex Trading and Investments. Please take note of the risk disclaimer. Everything provided in the video is strictly for educational purposes. Please also hit the subscribe button, like and share the video with your friends and your family. The content to be covered for today: introduction, using the critical levels on different pairs, gold, EURUSD, and NASADAQ 100. Bonus, secret book source or reference for the information presented. You don't need to work in a bank to have the secret information. A definite must watch. And finally, a quick fire summary. Introduction. Are you looking to learn how to properly use the hundreds and fifties critical psychological levels to enhance your trading? Do you really want more structure in your forecasting skills? Are you looking for reliable and credible information that will really set you apart from the rest? Are you tired of seeing people presenting information as their own without giving you something tangible that you can use to research by yourself? Then this video is just for you. General guide to using the critical levels. These critical levels are also called psychological levels. Humans tend to be attracted to the hundreds, 50s, and these numbers are significant to humanity. Examples of these numbers are 13,000, 0.00, 13,500, 0.00, 15,550.00. Those three numbers are relevant to NASDAQ. Now looking at gold, you have 1,000.00, 1,500.00, and 1,550.00. And looking at your currency for EURUSD, you have 1.50000, 1.25 000, and finally 1.35 500. These critical or psychological levels can be used as support and resistance, which help us predict market direction. Even though this information is from a stock book, we can actually apply it to our currencies, gold, or any other financial instruments. Let's go to the charts on MetaTrader 4. In our case, we have gold monthly chart. You can see I've already marked the critical levels. Looking at the 2000 level, we can see price pushes up and moves away from the level. This is called resistance. Now if you look at our 1900 level, you can see price pushes into this level and moves away. So we have another resistance level. If you also look at this blue candle right here, I'm going to call it X. It pushes into the level and moves away. Let's do it again. It pushes into this level of 1900 and moves away. So we have resistance and resistance again. And if you look to the left, you also get another clue here. Price pushes into this 1900 level and moves away. Again, we have another resistance level. Let's look at the 1800 level. We have resistance. The price pushes to the level, R for resistance, and moves away. Pushes again, resistance, and then finally it pushes again into the level. So you can see we have multiple resistance at the 1800 level. Now let's look at the 1700 level. In our case, we have a support level here. Price pushes into this level and moves away. As soon as it moves away, it's called support. And you can look at the past. We have some support based on this candle X. You can see price steps through this level. This candle Y, you can see price also steps through this level with the wick. So we have multiple support levels, and you can see there's congestion around this 1700 level. Looking at this candle, it's long-legged doji candle, you can see price pushes into this level and closes higher. Let me zoom in. From the 1900 level, we move into our support level, and you can see there's a rejection, and price closes in the middle here, approximately around 1800. This is another support level. Moving on to 1550.00, we can see multiple support levels. You can see price pushes in, moves away, pushes in, moves away. All this is as for support. Looking at your 1350 level, we have multiple resistance level. So we have one here, couple here. This wick actually stabs through. It is also called a resistance level. You can see price pushes away. Price pushes into the 1350 level and moves all the way lower. Price actually gets supported at this point. As for support, you can see we push higher and price retraces or moves into our support level. We can say support becomes resistance in the future, or resistance in the past becomes support in the future. Let us move on to 1050.00. We have a resistance level here, which gets converted into support right here. Draw that again, so that's R for resistance. You can see price pushes into the support level, moves away. As for support, the 1000 level also gives us multiple resistance points. So we have price pushing in, moving away, price pushing in, moving away, resistance throughout those levels. And we can say for the 700 level, we had a support point or support level. Now let's look at how we can use this to predict price. Moving on to the weekly chart. In our case, we can say with this congestion at this level, if we have a breakout candle right here, we can see price may be attracted to the 1900 level. Furthermore, if price moves lower and comes to this level and gives us a bullish signal, it can be a pin bar followed by an engulfing bar, we could say price would move to the 1800 level. Remember, we've said this was a support. Hence, if price comes here, could move higher. Let's look at something drastic. Take us back to the monthly chart. Let's say price crashes and comes to the 1050 level. I would use this because it was support in the past. Should I have a pin bar followed by an engulfing bar, this could potentially signal me to buy and for price to reach 1,200. Let's look at price crashing to 1,000, to the 1,000 level. Again, if I manage to get a pin bar followed by an engulfing bar, I would look for price to move to the 1,200 level, or firstly reach 1050, and from 1050 potentially reach 1,200. So now let us look at the weekly chart again. I've given you my projections. Let us look at one more projection, one more example. If price closes right here, we get a breakout candle. Could use this as an entry. I'll use 1 ATR as a stop loss. E for entry right here. This will give me a potential clue. The price could be attracted to the 1550 level. That's another example of using this amazing levels. We're now on EURUSD monthly. Once again, my levels have already been marked. If you look at 1.60500, price reaches the level right here and moves lower. This will be called resistance. Again, if you look at the 1.50000 level, we had one resistance point, another resistance point. It's definitely significant to price. If you look at the 1.40000 level, we also have another resistance point. Look left, we have more clues. We have another area resistance and one more there. You can see we have multiple resistance on the 1.40000 level. Is indeed significant. Let's look at the 1.24000 level. We have resistance. We've actually had support in the past. So we mentioned support becomes resistance in the future. We've had another support level. Another one right here. S for support, S for support. At this level, price pushes up. We get a resistance level. Another resistance level right here. Another resistance level right there. You can see there's multiple touches or multiple reactions from the level. Let's look at the 1.20000 level. We have a wick right here which pushes through or stabs through this level. This wick comes and touches the level. Again, support. Around this area, we also have another support level. Another resistance level right here. Also have support here. Another resistance level. You can see some resistance there. Some resistance there. You can see how relevant the level is. Let's look at the 1.15000 level. Right at this point, we have resistance R. You can see there's multiple resistance levels right here. Price almost reaches this level. We can call it support. Here we have a resistance level. Another resistance level right here. Again, significant based on price touching the level. And let us look at 1.0500. We have multiple support levels. You can see price pushes up. Price pushes down, moves away, pushes back into this level, moves away. So it's a very good support level. Looking to the left, you can see here we have another support level. Right there, another support. You can see there's also some support there. So how can we use it to project our price? Currently we have a bar which is forming here. Let's call it X. You can see it's moving away from the 1.1500 level. We've mentioned before, this is actually a support level. This bar X can actually act as a resistance level. You can project and say price could actually potentially reach 1.20000. Let's see if we can get more clarity. On the weekly chart, we want to look for some clarity or evidence. Here we can see prices moving away. Again, we mentioned this area acted as support. So ideally, I would have looked for price to come to this level. Somewhere around here. And give me an engulfing bar. So if price came, we had a rejection bar. Let's just say we had a rejection bar followed by an engulfing candle, or candle that is bigger than this candle X. I would have looked to enter it. 1 ATR, stop loss, an E for entry. In our case, it never exactly reached the level, but this could have actually been a signal. You can see this candle X is larger than the previous candle, and we are close enough to 1.15000. So this actually could have been an entry. You could have placed a stop loss, 1 ATR, and entered at the close of this candle, E for entry, with a target of 1.20000. This is how we use the candlesticks with the specific or critical levels. Let's look at more examples. If we get a bar which closes lower, so it would be a red candle known as a breakout candle. If it closes lower than 1.15000, I would predict price would move to 1.05000. So price could actually be attracted to this level. So you can see how structured our projections are with the marking of these levels. Let's look at other examples. Let's say price pushes into the 1.20000 level. Should it give us a rejection bar at this level, followed by an engulfing bar, we could actually say price would move lower with a target of 1.15000. Let's look at another example. Let's just say price pushes higher and reaches this level, gives us a red candle or red rejection bar followed by an engulfing bar, which is also red. We could say price could move back to 1.20000. And let's do one more example. Let's say price pushes all the way here. We get a breakout candle. It can be a large blue candle, and we can actually use a stop loss of 1 ATR. Close of the candle can be E for entry, and we can then say our target would be 1.40000. We are now on NASDAQ 100. This is the daily chart. Again, the levels have been marked. Let's look at the first level of 15,000. Let us look at this point called resistance. You can see price pushes into the resistance level and moves away. We have some congestion here. You can see price is actually supported. Price pushes into this level, moves away. As for support, we have another resistance level right here. You can see price pushes in, moves away. So definitely 15,000.00 is definitely significant. Let us look at the 14,000 level. Once again, we have a resistance level. You can see price pushes in and moves away. Again, price pushes in, makes a double top. And we have, you can see, two resistance levels. Let us look at it again. So you can see price doesn't exactly reach the 14,000 level. We can also say that price, we can see orders are around this level of 14,000. So we could actually do this. We could draw a box around this level. Remember, there's actually transactions occurring around 14,001, 13,999. So all areas between these price levels that orders are occurring. So hence we have areas. See if I can get my chart in order. Right. So we've mentioned this was resistance before. Resistance significant because price reaches the level and gives us a reaction. Let us move to the 13,000 level. For this 13,000 level, we can say we have support here. So price pushes in, moves away. You can see we have congestion around this level, or this areas rather. We have some support again here. Based on those two candles, you can see we also have support again. We have a little resistance in this area. Price pushes into the pushes into this level or area and moves away. It's called resistance. So good level to look at, 13,000. Let us move to 12,500. Again, 12,500 is significant. You can see we have price pushes up, moves lower, resistance. In the future, resistance becomes support. You can see price pushes into this 12,500 level and moves all the way up. You can see we have this candle and these other two candles which form support again. And in move based with this candle, we almost reach the level. Price pushes in and moves away, and call this resistance. Let's look at our 11,000 level. Same thing happens. We have resistance at this level. Okay, sorry, let us look at this 12,000 level. Again, we have resistance. Price pushes in into the level, it moves away, moves back into this level, moves away. We can say it's resistance again. And we have this one candle right here. It's a very small resistance point. Then we have this congestion around the 12,000 level. Looking at the 11,000 level, you can see we have resistance again. Price pushes in the level, moves away, does it again. We have support here because price pushes into this level and moves higher. Again, price pushes in, moves higher. We have some support. We have a little more support around this area. And we have a support again right here. So again, 11,000 is definitely significant. Let's look at our 10,000 mark. For the 10,000 mark, we have a resistance point right here. You can see price pushes in, moves away. We have a little congestion here around the 10,000 level. We can definitely say that's significant. Price doesn't exactly reach the 10,000 level. There is some resistance right here. You can actually get the exact level. So we're looking at 9,722, this level, rather around the 9,500 level. You can see we have resistance. Price reaches the level and moves away. Again, for the 9,000 level, let us look at it. You can see price pushes in, moves away, does the same thing again. Resistance becomes support in the future. You can see price pushes in and moves all the way higher. You gotta love these levels. For the 8,000 level, you can see we have resistance again, resistance again. We also have some resistance right here. The price pushes into the level and moves lower. Let's look at the 7,500 level. We have support right here. You can see price pushes into this level and moves higher. Price pushes into this level and moves higher. It's called support. And in this congested area, we also have multiple support levels. So how can we actually use these levels to our advantage? In our case, we have our 15,000 level. If price comes lower or moves lower and closes below this 15,000 level, we could say price may be attracted to the 14,000 level. Let's look at another example. Should price come to the 14,000 level and give us a type of rejection bar followed by an engulfing bar, this could indicate to us price would move to the 15,000 level. Let's look at price moving lower. Let's just say we crash and we come to the 11,000 level. We could use this 11,000 level provided we get a candlestick formation. Again, engulfing bar. In this bar, would set a stop loss 1 ATR, and this candle could be E for entry. Let me redraw that. We said price could potentially come here to the 11,000 level, give us a rejection candle followed by an engulfing bar. So it would be E for entry, and this could be stop loss, which is 1 ATR. This would indicate to us or tell us price could actually be attracted to the 12,000 level. Let's see if we have any more examples. If price crashed and came to our 9,500 level or area, gave us a candlestick formation, we could say price is attracted to the 10,000 level. It would actually move to the 11,000 level and move higher. So those could be the potential projections. In our case, price has actually closed above this level. It's approximately 15,701.39. This gives us the indication. Breakout candle right here tells us this could be moving higher. So let us move on further. Reference of book for the critical levels and my purpose for sharing this secret sauce. I've initially watched other YouTube channels present information on this topic, but they fail to give sources of their information. I've often seen and assume you have also seen titles of YouTube videos and courses for show. They're normally titled, or they say something like, learn to trade like the banks. I worked in a hedge fund and know everything about trading, bank trader, or inside information strategy, and many other titles which encourage or suggest they are trading experts. We honestly don't know how true this is, and we have never viewed their audited tax returns for their forex income. And also please note, cars, watches, Ferraris, Lamborghinis should never be your assumption of trading success. It's very easy to mislead, manipulate, over leverage, and show forex trading profits. I am using the exact same information from this book as a tool to increase my trading skills. The great part about having a tangible source of information is that I can always refer back to it. It actually increases my confidence. I have this new tool or weapon to take on the markets. This I love a lot. Reading great trading books can really enhance your trading knowledge and save you mentorship fees, signal fees, and any other fees. So this is the book source. It's called Technical Analysis and Stock Market Profit, a course in forecasting by Richard W. Schwabacker. So there's some information about the author. He achieved his financial fame in the 1920s and 1930s, first as a financial editor of Forbes and later as an editor of The Analyst, a weekend section of the New York Times. During this time, he also authored 3 books, which is The Stock Market Theory and Practice in 1930, Technical Analysis and Stock Market Profits. So this is the book I've used as our reference, or used as my reference rather, and Stock Market Profits, 1934. So this information I'm going to give credit for. So it's support and resistance levels, which is the chapter called 50 and 100 as critical levels from page 329. So finally, we've arrived at the summary. Use these critical levels to enhance your trading skills and knowledge. Study the behavior at these levels on all the pairs that you trade. Remember that even though they are drawn as a single line, they are actually areas of value. Look at the market as a place where there are orders around these critical levels. Price may not go precisely to the exact critical level, for example, 1300.00. Price can actually go to 1299.00 and react from this level. Hence, we have areas of value. In our case, both areas of between 13,000.00 and 1299.00 are considered important. You can also identify other levels which have significance based on price action for the pair that you trade. They don't necessarily have to be 50s or 100 levels. Please study your charts very well. You can also print your charts for study purposes. Reading books can really help with increasing your knowledge. Don't be afraid to read, learn, and keep growing. Forex trading skills are developed over a lot of time and effort. Good luck and fly high. Never give up. So we've come to the end of the video. Until the next video, goodbye.